Well, Congress cannot seem to come to an agreement to keep the government funded. So what does that mean for everyday Americans, for you federal workers out there that are wondering when that paycheck will come, especially if you are near retirement? So to tackle the news cycle and what it means for your money, financial advisor from Burns, Gerrod Galliano, is going to join us now to talk about what the stock market has done this morning. You were saying that you're not impressed with what it's done, so that's a good move.
Well, futures are down about 0.5%, so nothing too drastic so far.
So what are you telling your people that are your clients that maybe are part of the federal government system and are waiting to see if this shutdown goes longer than the one in 2019?
Sure. So a lot of people start calling in anytime they start to see the headlines that there's a possibility of anything, whether it's a shutdown or an interest rate change or anything like that. And a lot of people ask, should I make a big move?
Right.
A big change to the portfolio, and generally that's not the right move. So what we typically encourage is you have to be comfortable with your current level of risk, and these types of shutdowns, while they are a pain in the butt and the market doesn't like them, we don't like instability.
Right.
We like predictability. So nobody's a fan of the shutdown, but typically they're relatively short-lived.
For the longest time, people love to work for the federal government because of the stability, because of the benefits. What are you all seeing as a financial advisor, whether that reputation is still valid?
Yeah, that's a good question, because recently we saw lots of layoffs to the sector, and we have a lot of Mishu employees that had come in and told us they're not sure what's going to happen. So I do think that if you go through any job cycle, whether it's oil field, which used to be super stable in Louisiana for decades,
right,
became very unstable.
Same with move to Texas.
Yeah, it kind of all rotates out, you know.
Right.
So you're never totally safe, but yeah, that's also changing with some of the government jobs.
And talk about the importance of diversifying your assets, your investment, your annuities. What approach do you take with your clients, Gerrod, to be able to say, this is how we protect you when one of the islands goes dark, for example? How do you like to diversify? Yeah,
so great question. The biggest part is need multiple asset classes, but you need to continuously take your gains off the table because we just had a huge market run, really nice year to date. It's something like 14% year to date last we checked. So it's a good year. You need to be taking some profits because if you started with a 50–60% allocation in retirement, maybe you're up to 70% if you did absolutely nothing. And that's a little too risky. So when these negative headlines come, and they always show up, it's always a matter of time.
That's right.
Whether it's the Fed or something like this, it's around the corner. So if you need to take those profits quarterly or monthly, you need a strategy and you need to stick with it. That's what we typically recommend because even if you get the timing right on the sell, when are you going to buy back? Do you miss the run up? And even if you get one of those right, can you do it consistently? It's very difficult, and the math says you lose typically if you try that. So yeah, we say just be consistent, don't get too greedy, but don't react too much to the news.
Okay, wonderful advice, and this is why we continue the conversation. Thank you so much for being here.
Thanks for having me.
Let's go to Zach Fradella now to see what